Hello, YouTube. Is Microsoft the new king of Wall Street? It is dramatically in new all-time highs or blue sky territory. And we're going to come back to these notes in a minute. These are my S&P 500 notes. I'm going to go through all of these, but the story of the day is Microsoft. Microsoft pulls off a coup by hiring Sam Altman, the former CEO of OpenAI. Looks like Satya has a little bit of swagger in his step here. And why? Man, it looks like he just destroyed a $90 billion company. Ousted OpenAI head Sam Altman to lead Microsoft's new AI team. And then what? OpenAI employees threatened to quit en masse after former CEO Sam Altman joins Microsoft. Oh my goodness. Why is there a new king in town? Well, not quite yet. Microsoft is worth about $2.8 trillion, pretty close to $3 trillion, but Apple is still the king at 2.97. So what does this mean? It means that if Microsoft can rally by an additional roughly 7% and Apple goes nowhere, Microsoft's going to be the only $3 trillion company. So there might be a new king. I'll show you one more reason why, and then I promise we will come back and look at the S&P 500 notes, which is probably the reason why you tuned in. I'll make sure I get to all those. Let's look here to the heat map one more time. Why? Look at Apple's current valuation. It's 30.95. All right, so 30.95. What's Microsoft's? 35.8. Why? Because growth stocks that are growing more command a higher premium. So it looks like Microsoft is actually being bid up more than Apple. Maybe there's a new king in town. And we've got greed back. We went from 58 all the way up here to 62, even made it to 63 earlier today. This is really important because I was talking about seeing higher highs in the fear and greed, but also seeing higher highs on the chart. And we did it. We got there. We got above the 452 resistance. We got above the September high and August high. And we're right here, right back to where we were, going all the way back to August. So what does that mean? Man, the bulls are showing up. They are flexing. And it looks like we got a new leader that wants to drag us higher. As a reminder, we were looking at S&P with our multi-cut, our psychology chart coming all the way back up to the top. And we were looking for a move higher. This was led by XLK in SMH. So XLK, as a reminder, has one half of Microsoft and Apple, and the other half is going to be tech. It's different than QQQ. Why? Well, QQQ is at a 52-week high, but it is not yet at all-time highs. So the difference here between XLK and QQQ is just that Microsoft and Apple are just stronger. So it's actually a new all-time highs by being over 175. But what do we have? High, lower, high, lower, high. Low, lower, low, lowest low, and then we come all the way back up to our relative high, and then we go even higher. So what does this mean? It means the S&P is about right here, right now. And we can also note that there was not a sell signal that was generated on XLK, and I'll talk about those in a minute here because I talk about warnings. Daily lower low, close below the low. We've not yet seen that on XLK. We've not even seen it on SMH. So if chips lead tech and tech lead SPY, I want you to stay tuned for a few more minutes because Microsoft is also making moves into that space. But this is the thing we were looking at. We were looking at the psychology chart and all the way down, all the way back up. And it looks like maybe we're going to be avoiding this. Why? Well, because we got some leaders. SMH and XLK made new all-time highs and record closes going back to November 14th. And they've made even more of those. Oops, what did I just close? Is that the wrong tab? Let's just make sure I get back here to the correct one. There we go. All right, so let me get through the rest of the story. Then we will come back to S&P in a moment. But I'm going to ask you for a huge favor, please. If you could consider smashing the thumbs up and subscribing to the channel, I would really, really appreciate that. Thank you so much ahead of time for your support. It means a lot to me. Thanks so much. All right, let's finish off the story about we got fear and greed. We got those alerts on the broader market. We got S&P and QQQ. For invest alerts, we talked about those for good up to 2 months, but we got some swing alerts, which are currently failing, but they're getting me a little bit worried. So we had 2 false signals here. We had dog, PSQ and dog. We had one that passed, and we're going to talk about these in a minute when we come back to it. But why does this matter? Well, it matters because NVDA reports earnings tomorrow, right? They report earnings after the bell tomorrow, and I'm really curious what they're going to talk about for their guidance. Why? Here's an opinion, how Microsoft, maybe the new king of Wall Street, new king of tech, how Microsoft's new chip for AI could disrupt big tech, especially NVIDIA, AMD, and Intel. So this is only from 2 days ago. 3 days ago, published on the 17th. It's currently the 20th. So Microsoft is coming for whose lunch? NVIDIA, AMD, and Intel. AMD delivered solid results, guided higher. Let's look and see what NVIDIA is going to do. Why? We talked about it. We got a lot of key events for this week. We got NVIDIA earnings after the bell tomorrow, and the Fed meeting minutes are actually going to be on Tuesday. So tomorrow at 2 o'clock, Fed meeting minutes. And then we got NVDA earnings coming out at 4:30 after the bell. So if this move is exhaustive, we're going to come back and talk about these notes at the end of the show to figure out whether or not there are warning signs for the market to go down. All right, let's just finish this off here. So we got that one. Quick housekeeping item 2. I'm going to be live every single day this week, except for Thursday when the market is closed. So if you want to come back tomorrow and talk about today's commentary, I encourage you to do that by coming to the stream, which will be scheduled shortly for tomorrow. Final thing I want to talk about is that it's okay to hold on to a winner and let it run. So here we can look at Warren Buffett. Half of his portfolio, 50.04% is Apple. So a lot of big a lot of big hedge funds are really bullish into Microsoft. And if they don't sell, the stock could definitely go higher. We're seeing a bid come in for that stock. All right, let's move forward. Let's go here to the notes now. Thank you for your patience too. Let's just see if there's anything else that actually moved today. It's mostly a Microsoft story. So that's what we're going to focus on now. All right, moving to the broader market. This is our weekly note. First thing I want to do is actually go back in time to look at our monthly levels to see that you can understand where we came from versus where we're going, because I think I called it pretty good this month. I was looking for a continuation move higher into today. We talked about that on the stream and we got it. So if you want to better understand exactly how this happened, no time like the present. There's a current 40% off on Black Friday. I'm going to walk you through some of the content that I normally only share for our users. So something that's really easy for me, if we look here to a monthly chart, is that at the beginning of the month, things were looking a little bit more shaky because we were currently in a red month below the previous monthly candle. And for me, that is just not a bullish sign. So the way that I've tried to think about this is, what's something people find very easy to understand? Well, green light means foot on the gas. Yellow light means foot on the brake. Sorry, hovering over the brake. Why? Well, we want to see if we can make it through the intersection. We don't just slam on the brakes because it's yellow, but we slam on the brakes when it's red. So what does that mean? When it's green, we want to be long. We want to be bullish. When we get into a yellow light, we want to be cautious. We want to be locking in profit. We want to be raising our stops. We want to be trimming. On a red light, we want to be stopping out. Well, 409 is a lot lower than where we are right now. So being above 439, that was a breakout. That's bullish. If you look here to the monthly note or the weekly note now, this is the monthly note. Base case was bearish. We had 4 lower highs, 3 lower lows with a bear tilt. However, let's keep reading. The bull case was when we got above 439, and that's like been a terrific trade. We're up by 8.6% on the month. November is traditionally the best month of the year, and December is going to be the second best month of the year. So pause the slide if you want to read all of this. All it talks about is that we want to exercise patience because team risk reward is bullish, but team probability is bearish until we get a monthly higher high, which we've now gotten. So my preference for bull is right here. We're approaching 459, and this is looking pretty good. So from the beginning of the month, we're almost up by 10% now. And there's the monthly chart that I was looking at. So there you go. Let's move forward to our weekly note now to see exactly what we have. So I was wrong about the Fed meeting minutes. Those will be on Tuesday or tomorrow at 2 p.m. And then we got NVDA. And then we got Wednesday, no economic data. Then we got Thursday closed, Friday half day. Looking to the weekly chart, we can look to this one right here. So we look to this chart. This is the one we talked about on the opening stream. Let's go through it right now. All right, so we are butting up against major resistance, which is that 452 area you can see right here. I talked about that. It's our Fibonacci area at 451.76 and just where I think resistance was. So by butting up against resistance after a 10% rally in 15 sessions, what does that mean? It means since we closed at the high of the week, we should get a weekly higher high. That's now happened. We're here at 454. We even got above 455. So what that means is that if we remain over the previous month weekly high, which is at 451.42, let's call it 452 to make it nice and round and simple. If we're above 452, bullish. If we fall back below 451, that would be a weekly failed breakout. That's the beginning of a bearish move. But remember, we're still bullish, right? We talked about that. Above 439, we're bullish. So this would be a short-term corrective counter move that we're looking for. And we got some warnings here. And if you come to those streams in the morning, or if you check in at the end of day video, I'm going to walk you through all these warnings as they happen, if they happen. So the first warning is a daily lower low with a close below the previous candle low. So we've had a few, we had one daily lower low. Let's just go back and check on that. And that happened all the way back to here, which was our crash landing back on the 50. And since then, we formed a lower low, but didn't close below. And then we've just ground higher. We actually passed on this apex, which was a really big bull test. So number one, we got a warning with a daily lower low, but we didn't close below the previous low. The last time that happened was at the 50 DMA. So until we get the first warning, like, we're probably going to keep melting higher. It could all change tomorrow, right? With the Fed. I don't know what they're going to say in those minutes. I don't know what NVIDIA is going to report. And Microsoft may be coming for their lunch. Warning number two, SH swing algo. I'll go through that in a moment. So far we had SH earlier on November 9th. Part of the reason why I got bearish on that date, by the way. And if you look at the risk reward here is the reason why I'm a little bit concerned. Why? Look at the risk reward. Risk reward is if we're right, we make $12. If we're right, we make 13. If we're right, we make 11. If we're right, we make 6 and 6, which means the risk reward for the bulls right now is not very good. We haven't gone down yet. We don't even have the first warning. So a second warning would be an SH swing algo, which just means the inverse for the S&P is trying to go up, which means S&P is bearish. Make it simple. Number three warning, 438. That's the gateway for the bears. We just talked about the reasons why that is there. So talking about our system, since it is Black Friday, and I'm trying to show you a little bit more in terms of the information that drives my decision making. We look here to SPY and QQQ, and we hover over. It says optimal holding period is at least 2 months. When did these alerts go off? November 3rd. So November 3rd plus at least 2 months takes us to where? That takes us to the end of the year. Takes us to January. So why does that matter, Justin? Make it really simple for me. Well, if November is traditionally the best month of the year, and then December is the second best, we can go up more, and then up even more. That's what this means to me. And if we remain above 438 until the close of the month, like, the move has already happened. We're already up pretty dramatically. If we're going to get a short-term move lower, this is where I'm looking at these alerts here. So let's delete S&P and QQQ. So these different alerts, DOG is going to be inverse Dow, PSQ is inverse NASDAQ, and SH is inverse S&P 500. So when these things alert, it means that they're trying to go up. And when we look here at the platform, like, dramatic move lower, but if they go up, this could really hurt. That could be a little bit of a stock market crash. So we're getting some warnings here. The last ones that fired and alerted, but they were just whispers. We like to look for the algo alert, which comes in as a blue alert. But to make it really simple, the market tried to go down a few times. It's been unsuccessful. We all know that the stock market generally takes a staircase up and the elevator down. So if we start taking that elevator down, I'm warning you. So what does that mean? Long-term, we're bullish. By looking at the weekly charts, we got our alert as we were breaking out right here. We actually got it on this week and on this week. And now, as long as we stay over, it's bullish. And as a reminder, 439 is going to be our support area. I want you to pay attention to one final number here. We're going to go back to these invest alerts, and we're going to look at S&P and QQQ. And the reason why is because the risk reward on these was not that great. 0.6 and 0.8. So what does that mean? It means we still went higher anyway. When we look to where we could retrace to, well, that's going to be our 52-week high. And then it's all-time high after that. But where's our risk? Our risk is down to minimum 438. But really, we don't know. We're not going up until we actually blow this low out, because that's where the reversal happened. So all I'm trying to say right now is that the risk reward, whether we look at QQQ and SPY, it was not great. Or if you look at the risk reward for the inverse signals, it just means that as we're getting close to this resistance, it doesn't mean we have to stop there. It just means I'm expecting to find sellers there. And if we do, we're risking, we can go to 459, that same area I talked about on my monthly note. We can make about $6, but for us to slam down to strong support, that's at 438. And 454 minus 438, that's 16 points. So if we're wrong, we lose 16. If we're right, we make 6. Does that seem like a winning strategy? No. But if we now look at my personal portfolio, I will show you that it's okay to hold on to winners and let them run. I've shown this before, and I've gone over it on other videos. Here, I'm currently about a third invested, but the important part for me is that I like to cut my losers fast and let my winners run. So on this position here, what it means is that The only stocks that have not been trimmed that I can't lose on are going to be Jets. I own that stock at $15.94. It's $1 higher right now. My trim is going to be at $17.48, or about 50 cents higher. And the only other one is DDD that I bought with you on the stream on Friday. I got a trim on Paramount today. That's why you see a little dot here. And it means all these names I can't lose on anymore. So even though I'm a little bit anxious about where the market could go, if we keep going up, I'll be taking advantage of that. But on the flip side here, I have an idea that got created for Dog and PSQ, and I'll be actioning these if they actually fire and hold. Again, if you want to find out a little bit more about that, you can go to our website or just come to the stream, which is going to be on tomorrow. Finally, the reason why this is so important for the bulls is because if we look here to our monthly chart, 438 is where I would expect to find buyers, but we're not truly bearish on the monthly chart until what? Until we actually print a monthly lower low. That's at 418. That is a lot lower than we are right now. On the flip side, if the bulls are going to maintain control, I'm looking for a very simple pattern. It goes all the way back to 2020, where you can see here we talk about close. Over here we talk about currently over. So that's why that 438 threshold is so important for me. It means that we're going to be closing over the previous candle high. If you want to watch more commentary, I now have a video queued up here for you on the left-hand side. Actually, I'm going to leave the algo video here for you on the left-hand side. If you want to watch the weekend review, I will leave a link on the YouTube channel. If not, thank you so much for tuning in, and I look forward to seeing you on the next video. Thank you again.